Okay, this is my daily video. I want to talk today about how to build an investment strategy. I'm getting a lot of new viewers. This seems to be drawing some people, so I need to introduce myself. I'm Kerry Grinkmeyer. I'm a retired financial advisor. I sold my financial planning business back in 2005 and basically went and traveled the world and gave up on pretty much investing. Something happened to our family in 2014, and it pretty much dictated I needed to redirect my interest, and I needed to get involved in something. So I got involved in real estate. About November of last year, I was doing a YouTube channel on real estate, and I realized that my interests were greater about the world I came from, the financial planning world. So I changed my channel towards financial endeavors. I then built what I call Best of U.S. Investors. And what we are is a group of individuals who have some varying knowledges of investing, and we share our knowledge. I'm the leader of the tribe, and I'm basically giving you my knowledge that I've acquired over the years in investing and while I was a financial advisor. The other thing I think that is very important is that if you're going to be involved in investing, you have to build a knowledge base. You have to understand the industry and you have to understand the world that you live in. We are in a very changing world. We are right now in the midst of the convergence of disruption and technology, and that is changing our world from the industrial age to the data age to the technology age, where our companies are going to be, for the most part, tech oriented, and they're going to be driven by data. So I have two methods of investing. One is I build my holdings in the companies I want. If you want to get the knowledge that I have for about the economy we live in, go down into the description and get the books. The Accidental Superpower, The Big Six, and The Future is Coming Faster Than You Think. Those three books will give you the basis to understand the market that we are currently in, that we were in, and where we're going. Those are the basis of all of my investment decisions. Then the other thing I do is react to current events. Every night I watch the evening news. Every morning I read the Wall Street Journal because that's what's telling me what's happening today. And then I take my investment strategy and plug that into current events. So let's get into current events and current today's investment strategy. First of all, I need to tell you, I am number one, an investor. I invest for the long term. I invest for the tech data industry. I do not buy for the short term other than based on opportunities. What do I mean by opportunities? 9/11 was an opportunity. It was an event that happened that drastically affected the market and created emotional reaction driven by retail and some professional investors that gave me opportunities. We have two of those right now. We have the pandemic. Out of fear, it crashed the market. It took some very good companies and pushed their prices down to unbelievable bargains. One of the best of those that I can think of was American Express. American Express is a credit card company that's been around forever, and it's a strong company, but its stock dropped 45%. Did I believe the pandemic was going to destroy American Express? No, I knew that it would come back. So I bought down there, okay? And I wrote it up. Is American Express a stock that I want to own 10 years from now? No, I do not, because I believe the tech industry will put American Express out of business. They will only deal with people who cannot use their phone and cyber currency, that there are cryptocurrencies, to pay for goods. There is no reason the merchant of the future is going to give American Express 2.5% on every purchase that they make. And Facebook or Google or Apple will give me a reason to give up my credit card and transact my currency through my phone. So, but I know American Express in the next 8 months will come back. So I bought it based on the event. That's what I call an opportunity stock. Now, on the other hand, then I have the 6 or 7 long-term holdings that I want, and I'll get into that in a second. So what I did this week was I watched my news. I realized that we have a pandemic, and the way we're going to stop this pandemic is through social distancing, limiting the number of people I come in contact to, so I limit the opportunity or the potential of me getting the virus. But what I saw on Memorial Day, and then 3 days later, after George Floyd was killed in Minneapolis, I saw millions of people protesting, walking down the street, shoulder to shoulder, most of them without masks on. I saw on Memorial Day people on the beach, people in the pool, and in the Ozarks. And I said to myself, there's a 14-day incubation period. In 14 days, we're going to have a spike in the cases of the pandemic, of the virus. So I said on Tuesday, 14 days after Memorial Day, sell your opportunity stocks because the market is going to take a dip. And sure enough, on Wednesday was a small one. On Thursday, it crashed. So I was out of those stocks, those opportunity stocks, and they were American Express, Disney, Hilton, McDonald's, Berkshire Hathaway, and Valero Oil. I sold all those stocks on Tuesday, and then I'm watching them, and if they hit new lows, I might buy back into them. But what I really wanted was to raise capital so I could buy into my long-term holdings as they came down. And that's Amazon, IBM, Google, Microsoft, and Tesla. And I wanted them to come down to their gaps. That is a gap in their sales history where their high for one day was gapped up the following day, and it was higher than their previous day's high. So there's a gap from Monday's high till Tuesday's low. That's where I want to buy because the market basically has a tendency to fill those gaps. That if there is a sizable gap from yesterday's high to today's low, the market will find a way to close that gap. Not all the time, but most of the time. So I'm looking to buy Amazon at $2,180. Got a long way to drop. Facebook at $197, not so far. IBM at $117. Google at $12.96. Microsoft at $166. And Tesla at $835. Those are my buy points. That's my strategy. If I see that happen, I buy. I will never sell those stocks unless they change their way of doing business, unless they change from being a digital company. Let me explain. Watch my video this morning. I explain digital companies, but they create a product that has a high cost to create. Think of Amazon. They basically created a product by taking Sears Roebuck's catalog and digitizing it, and then making products available to you on your computer, and then creating a delivery service that could beat or match you going to the store. Okay? That's a digital product. Facebook has a digital product. It sells advertising. We'll talk about that. That's IBM creates a digital product. Google creates a digital product. Microsoft creates a digital product. I I pay Microsoft $99 a year every year to have access to Word, Excel, and PowerPoint. I don't think about it. I just pay them. That is the same case as I use Facebook for free, but they sell my data to advertisers. That's a digital product. The reason I like that is their gross margins are somewhere in the neighborhood of 25, 35%. They can borrow money for 3%, turn it into a Instagram, and make 35% on it. That's the kind of business I want to be in. As I said in another, I don't want to be in the business of manufacturing products. I live in a house with 6 toilets. I've been in this house for 35 years. I've not replaced a toilet in 35 years. So why would I want to be in the toilet business? Why would I want to own a toilet stock, American Standard, or any of those? Why would I want to own a conventional car company? I drive my cars for 8 years, 150,000 miles. Why would I want no client base and then have to deal or compete with multiple other car companies? I don't want to be in that business. I want to be in the digital business. Okay, so that's how I invest, and that's how I want to invest. The other thing that has to happen for me to be a good investor and for you to be a good investor is you have to learn to manage yourself. I got a comment this morning. Yeah, I sold all my airline stocks yesterday and took a tremendous loss. No, you had a strategy. Your strategy was that Delta crashed. And you bought it probably not when it at its bottom, but it came up a little bit and you bought it. But then yesterday it crashed again and you took a loss. Don't do that. I know why you did that though, because that voice in your head said, Jeremy, you made a mistake. You stupid ass. You shouldn't have bought those airline stocks. Well, what do you think's going to happen to the airlines? Are they just going to, like Hertz, file bankruptcy? I don't think so. I think the government will make sure that the airlines, that Delta doesn't go bankrupt. They will come back. You had a strategy, but the roommate in your head who you have 90% of your conversations with told you were a stupid fool for buying Delta in the first place and get out of it. And you listened to them. That's your mistake. You have to manage yourself. And I'll share with you, I was not a good manager of myself. I believed I was dumb. My teachers all through school told me I was dumb. My third grade teacher put me in the back of the class and told me I was a bluebird and not a cardinal who sat up in the front of the class, and I couldn't read. When I graduated from high school, my counselors told me to go become a car mechanic or a plumber because I would never make it through college. I went to college and the counselors told me I would flunk out because I had the reading capabilities of an 8th grader. I was constantly told I was dumb. I believed it. And then I fought my way through school and I learned to teach myself a different way, because I was dyslexic and I couldn't read. And then Audible basically brought me up to speed. I read constantly, but I read with my ears. What I discovered was there was 10 days in my life that gave strength to that roommate in my head who told me I was stupid. And I had 90% of my conversations with for the rest of my life. And then I went back and I found the 10 days in my life that basically set me up for the belief that I was not loved, I was not good, and I was stupid. And I discovered those 10 days. I then reconciled those 10 days in my mind and evicted that roommate. And I got a new roommate. And my roommate now is my highest, believes in me immensely. Every morning wakes me up somewhere between 5 and 6 o'clock in the morning and tells me, this is what we're going to do today. This is the video we're going to make. And this is what we're going to teach people. And this is what we're going to share with people. And we're going to make this world a better place. That's who's in my head now. But I had to get rid of them. So I wrote a book, Find Happiness by Discovering Who You Are and Why You Are You. This is in the description. If you don't read anything else in the rest of your life, read this. Then you will have confidence to read the other books I want you to read, and you will find put yourself on a route to become wealthy. Maybe it won't be in investing, but maybe it'll be that passion that you've had hidden in your life that you didn't. Maybe you should be an artist. Maybe you should be a professional fisherman. Maybe you should be a roofer. I don't know. But there's someone who lives in your head, your unwanted roommate, who tells you you can't do it. Well, I'm here to tell you you can. And today is the day to turn your life around. Do it.